Day on this Tuesday morning, whether you're a big investor or just a small one, a lot of anxiety out there these days. Financial advisor Ed Butowsky wants to be a calming influence in these turbulent times. Hello.
Hi, thanks for having me.
People see that huge point drop yesterday. You got mutual funds, and you got 401ks, and they think, boy, I got to get out of the market. What do you say to that?
I've been having a lot of conversations recently on this, as you can imagine. First thing is, as a percentage, this was the 17th worst day. It was not the worst day in the stock market history.
Not the worst drop in terms of percentage.
Percentages, and that's important because that's what really matters out there. People normally during times like this react the wrong way. They think about how I need to get out of the market because they think this is going to continue. What you have to look at is what valuations are on the stock market, and values of stocks right now are very undervalued, meaning that they're about 25% undervalued. And an example would be 1987, stocks were about 40% overvalued. This is a time to not be selling and not reacting.
Wow, okay, so is your advice then real simple? Just ride this thing out because we could be looking at, what, you think, a sizable increase based on what, the idea that they're undervalued?
Yes, and what you have to look at is also history. If you look back at every crisis that we've had since 1950, and look at the low point of that crisis, the stock market on average has risen 36% 1 year later and 54% 2 years later. This crisis is a little different, but I don't think it's that much different when you look at valuations of the market.
Well, do you think then when you hear from the political leaders, the White House economic team, President Bush, the leaders in Congress, are they overhyping? Are they overstating the danger we're in?
I think a lot of things happen 30 plus days before an election. And you hear a lot of things that might not be that important to the overall economy. In terms of what we're seeing right now, we have a liquidity crisis, but with the stock market, you always look at earnings, and earnings are shaping up to be pretty good for next year.
And so you obviously then you expect that some kind of bailout plan to pass. Is that what you can predict that?
Absolutely. I don't think there's any question we're going to see a bailout plan or a rescue plan, is the way I like to call it. And when we see that, we'll have clarity. Then we'll be able to see what earnings might look like for the next year and the year after. And with that in mind, I think without any question, stock prices will be rising from here.
So what are you doing with your personal money and that of your clients?
We got pretty invested yesterday. We started buying towards the end of the day, and we moved from lower quality companies in some of our clients' portfolios who preferred to own those to much higher quality companies. And during times like this, you buy quality. And anybody in a 401k plan right now, the craziest thing you could do is think about selling out at this moment. Quite frankly, you should be moving from any bond positions you have in your 401k plan over to equity exposure.
And you were buying with money in your own personal wallet yesterday, huh?
I absolutely was.
So I think that's certainly a good indication.
Yes, no question about it. We are very bullish on it.
Okay, Ed, thank you so much. Appreciate you coming in. The time now is 7:26. Fiery.